Very well. Nice to see everybody. Happy Monday.
Doing good, doing good. Got to decide, are things on sale or are they about ready to go on clearance? We got to decide that.
Good point. Yep. So Tyson and I have been talking for a while about noticing that there was a bit of a capitulation move, meaning a one-sided directional move bullish over the last several months. And look, bottom line is we've just had a lot of positive things in the economy, the recovery, COVID vaccinations, all these good things in the world have been priced in. And so we just got to the point technically where we were looking for corrections to take place. And you have to remember, corrections are normal. Corrections should happen. And so we were looking at an 8 to 10 to potentially 12% correction in the NASDAQ or the QQQ. And so Tyson and I, through our Equities on Demand course, have taken a bear position. And so we took a bear call spread. We issued it last week with our traders, and it is now, Tyson, it is like safely in the money. And honestly, if we continue to flush down, like we've had about a 3.5% sell off from the highs of last week. So we called this. If you timed it with us, we got in pretty much exactly how we needed to and about the time we needed to. And like Tyson said, is it on sale or is it on clearance? And we're about to find out this week, because I have a feeling that if we start to see, here's what traders can look for to know if this is truly a bear correction. If we start to see that the market opens and then pushes bullish all morning and then flushes down all afternoon, we're looking at real correction movement, which means you need to be in a bear direction right now. So the Qs are coming down, the SPY is coming down, the DIA is coming down, the Russell's been coming down. All these major indices are going bearish for right now. And again, it might be for an 8 to 10% correction. I have 10 to 12% written on the Qs. Those are my big levels. And then we see what the market's made of. We see if the market, if everything's on sale, we see what the market's made of in a correction territory. Because after we see 10 to 12%, people want to buy stuff. The market has this psychological level, like 10% correction, let's buy it. But then if we get past that, if we go 15 to 20, we're going to really put on some red flags where it's like, holy crap, is this the top? Is this what everyone's been worried about? But we don't know. So it's just now getting started. I like having some, good hedges out there where, Tyson, you and I are long volatility and we are short these indices. And I think right now that's a really nice play that we can talk about, today in session. And we've talked about it for the last week in our Equities on Demand class.
Yeah, and just to second that, pull that chart back up, Gary, because what's happening right now, technically speaking, is really interesting because, we look, and I think you're spot on with, targeting that uptrend line. And I think we got a nice inside trend line break today with the gap down. And chances are, it looks to me like we're going to, because we have that gap down today, I wouldn't be surprised if in the next few days we go back up, try to fill that gap, create that right tip of a crown, kind of on the shorter term, Gary, that right tip of the crown, and then flush down to the back side of that trend line. Also, other things to think and keep in mind as far as that support this thesis of this sell-off is the bond market. These are some of the smartest individuals in the entire world, and this is where massive money is parked. We're talking hundreds of trillions of dollars, maybe even towards the Q number, the quadrillions level.
Right.
And we have a 10-year yield sitting under 1.2%.
I know.
That is absolutely ridiculous. Now, I want you to put this in perspective for a second. There are trillions of dollars of very smart investors saying, I will accept for the next 10 years 1.2% on my money. When you have stocks out there like this, Procter & Gamble, one of the safest, most bellwether blue chip stocks that has ever existed in consumer staples. You and I, we're going to still need deodorant, brush our teeth, and all that kind of stuff. And we have a stock like Procter & Gamble that has a 5-year projected growth rate. No, I'm going to 5-year projected growth rate of 8% is trading at a debt to equity level of a 0.5%, 0.5%, and pays a 2.4% dividend. The U.S. market has a growth rate of maybe 5%, so less than Procter & Gamble, has a debt to income ratio, so a debt to GDP ratio of like almost 1.5 times, and is only paying 1.2%. So, but what was crazy about that is, in comparison, Procter & Gamble is like a million times better investment than investing in the U.S. bond market. But why in the world is this trillions of dollars going to the bonds? I think they're concerned about something coming around the corner, Chris. I think we can't ignore what the bond market is telling us.
Yeah, I totally agree. And and that's why we've seen this really interesting divergence of like yields are dropping, but the bond market is showing us really the writing on the wall. And again, like this could be, we don't know how permanent this is, right? Like we saw this amazing reaction from last year's COVID crash, but we don't really have the kitchen sink approach. Like how much lower can we go with interest rates? How much more stimulus can we throw out in the world? So I think that's probably what makes this as scary is if we really get into true bear market. That's why it's like, what can we do from here other than what we tried to do since last year? So it's, again, like we will be watching closely, and I don't want any of this sound of like, oh, the markets are falling. Tyson, you and I said first thing this morning, the stocks that we own, the stocks we want to own, that's great. Like these, you're going to get things on sale. That is the best part is you can buy stocks that you've been waiting for. Like we were talking about it today. I stopped adding for the last probably 2 months. I stopped adding positions to my Facebook. I stopped adding positions to Amazon and Apple and Google and Microsoft. Like I've been getting in those stocks almost every month and just contributing to partial shares every month because they just keep going up. But now if we actually see a correction, I did the same thing in my retirement accounts of 401k. I went straight to cash because I just want to wait. I think that if we have a healthy correction, I will then start buying dips after a correction. But it is silly to me to buy at highs, and then have to weather the storm. Because if we have a 10% correction, it requires a 13 to 15% recovery just to get back to break even. And if we drop 20%, it takes 30+% to get back to break even. So people lose sight of the fact that the market, we have these all-time highs and we get so scared about, oh, the Dow dropped 1,000 points. Right, but points in an all-time high don't mean anything, but percentages do. If the Dow drops 50%, we have to get 100% gain on the Dow to get back to break even, right? So it's like a 10% correction is exactly that, but we have to get 13, 14, 50% of actual gains to get back where we started. And so that's why for the last 2 years, all we've seen are fractionally higher highs because we have these big flush downs and then we buy our way out of them. We have this flush down and we buy our way out of them. And we have these crazy polarizing cycles. It's been nuts.
So I'll put a button on this,
Sure.
Gary, Chris, and I'll say 100%. You raise cash, long-term portfolios. I think the overall stock market in general is gonna. I think we're gonna be able to buy high-quality stocks at lower prices. I think the bond market's reflecting that. High-quality stocks being the Disneys, the Procter and Gambles, the Caterpillars, things like that. However, there are some speculation shots that I want to take right now. Let's talk about the Delta variant. Stay at home. Beachbody, BODY is one of my favorite, absolutely beat up, ridiculously cheap stock right now that I have 6,500 shares in the thing and I love it. I want to continue to buy BODY. That is my favorite speculation play as of this moment right now.
Yep.
It's a stay at home play. People are going to still, hey, I can't leave. I got to wear my mask. I'm going to work out at home.
Okay. Well,
That's
good.
What Gary does every day. Gary works out at home every day. Sorry, so buff.
I agree. I agree. It would mean that there's a lot of pain. It'd mean that the Delta variant was probably a big deal. It'd mean that the 10-year yields are probably sitting at about 0.6. It'd mean that 30-year mortgage rates are probably 2.25%. It'd mean that layoffs are pretty wide and people are feeling pretty bad. But what that also means is opportunity for people to pull themselves up from their damn bootstrings and make a ton of money on the recovery. So absolutely. I think what I look at is this: it means a lot of pain, destruction, but it means opportunity.
Just like it was last year. I mean, honestly, we might have this entire wave of like the last 14 months. People feel like they missed out and they doubted the fact we'd have this COVID recovery, right? You and I were very bullish in April of last year after we were extremely bearish in January of last year. So this would be absolutely nuts to have the market give us a second chance. And here's what I think. If the market gives us a second chance for this type of opportunity, maybe it doesn't recover as quickly as it did. But imagine 2, 3, 5 years down the road where we're having the same type of exponential returns that we saw like happen the last 12 to 14 months. Like we went in hyperspeed to have this recovery get forward priced in. And if we just have the chance to buy everything at these crazy discounts again, just have the long-term mindset of 2, 3, 5 years down the road, you could be sitting very, very pretty by having the courage to take these opportunities.
It's a chance to catch up.
Well, I mean, if we go down to 259, that's about a 30% sell-off. We had the same thing happen last year in the NASDAQ. It was a 30 to 37% sell-off, and then it rallied 60%. So if we have another 30% sell-off, look, whether you like it or not, I mean, people can make the argument of growth versus value and, what stocks are going to be the most important. Tyson and I joked about this last week. If you look at the last 20 years, growth and value have essentially yielded the exact same returns, about 9% annualized. So it doesn't matter what portfolio you're in. I do think that the world knows this, growth will be a more attractive buy, right? The world is changing faster because of better technology. The NASDAQ is what reflects that. And so if things are beat up and available and on sale, the cream of the crop will rise. I mean, you can't tell me like if Amazon came down to $2,500 or $2,000, show of hands, who's going to buy it? I will. Right? It's at $3,500. It's like you're talking about major discounts like Microsoft. If Microsoft came down to under, $150 to $100, I would buy the crap out of it. And I think everybody else would too. So technology is going to continue to change the world and innovate the world. Look, to the detriment or the betterment of society, like autonomous this, more AI. Tyson, I know you have that conversation of like, look, people out of work might forever be out of work because eventually companies get smarter and they make more money with profit margins. And guess how they do it? They automate. Technology is going to change the world. And so again, a 30% discount on the Qs, a 30 to 50% sell off on stocks. I mean, I believe that longer term, if you have the courage to, buy the falling knife, obviously within reason, but buy the falling knife and have the courage to invest, I think that pays really, really massive dividends. And again, it may not be as fast as before. And again, we might be getting way ahead of ourselves. We might not see anything more than a 10% correction and the market finishes higher for the year. There is so much accommodation right now in the world that there's going to be some violent buying sprees probably in the next, if the markets drop 8 to 10%, which is crazy, that would happen fast. But we know how violent the markets are going to buy that too. And then we see what they're made of. Are they buying it enough to take out recent highs, or are they just buying it to kind of throw up the dead cat bounce, and then reality sets in where we still flush lower? We have to be ready.
Like this. If you bought the dollar yen real fast at 100, I cannot guarantee you whether you're going to be up or down in the next 10 years, or let's say 20 years. Right. You buy the Qs at 230, I guarantee you have double your money in 20 years.
Yeah.
Guarantee it. Why? Because look at history. You're buying it basically 30% lower from an all-time high. We are going to be markets moving up. That's like a 4% return. We're going to get a 4% return in 20 years.
Sure.
4% compounded return anyway.
Agree. Yep.
Yeah. It's exactly like the stock market. I think this is we're seeing the great what should we call it? The great second chance. trade.
Yeah.
That's what's everybody should get excited about this. If you've lost some money, okay, but this is your second chance. I am planning on. I'm excited to buy a lot more Bitcoin between 20 and 22,000 in the crypto series that we ended a few months ago. Everybody knows that I've been bearish since Chris and I were talking at 55, 60,000, and so I believe we're heading down there. When we get down there, I don't care. I'm going to buy, and I don't care if we go lower. That's going to be my buy level. Could we go down to 15? Sure, we could. Could we go down to 10? Sure, we could. But again, mining costs are about anywhere from, probably right around $20,000, give or take right now. We're likely going to go to that level. We could surpass that level, but that's the level that I want to buy at. And if we have an opportunity to buy down there, I think you're buying at, just like stocks, you buy the Qs at 230, you have an opportunity to buy potentially generational, phenomenal levels that you can hold for many, many years.
Yep.
Yep. Yep.
Yeah, so Ethereum, Litecoin, Bitcoin are probably my primaries I'm going to focus on. I saw today in my YouTube session, someone's like, really strong support on Bitcoin at 28,000. I'm like, right, and guess what? That support can break, and when that support breaks, it's probably going to go quickly down to 20,000, which is where I would be a willing buyer. And so Bitcoin might be the barometer that leads everything. So Bitcoin flushing down to 20K means Ethereum drops to levels that Gary wants, levels that I want. Litecoin might be sub 100. I still like those coins. I mean, honestly, you can see some really clean trend lines after the big flush, after Elon Musk, after China, really simple trend lines. Just wait for price to break, right? And here's what I want to say. This is my mindset going into cryptos. I'm going to dollar cost average in at levels I like. I'm going to wait for trend lines to break. And I'm just going to be patient, because just like we've seen the last 3 or 4 years, 2017 took time to rally, and then the rally went exponential. And then 2018 and 19 took time to correct. 2019 to 20 took time to rally. 20 to 21, the rally ended. Now we're correcting. It takes time to build a base. It takes time to form these lows. So I like buying them at attractive levels, but I don't think the expectation is exponential returns within the next 3 months. It's like, if you get attractive price levels to buy at, be willing to hold those for the next 12 to 24 months. Because I think if your 2021 highs are the target or beyond, you're going to be happy you had the courage to buy it. Again, it's risk capital. It's purely speculation again on these cryptos. Do I think, the Fed is taking, digital coins seriously and other coins are coming to market? All that stuff is happening, but I still like the majors. I still like, Bitcoin, Ethereum, Litecoin. Wait for trend lines and be patient at those lows. It's going to take time to build the base. But again, I think there's going to be another, let's say 3 to 5 years from now, another generation of millionaire traders that were like, I bought cryptos in 2021. because everything was on sale. I'm serious. Like the same people that have been holding since 2017 or 2019 or 2020, lives have been changed for the better. And you might call it pure speculation. It might be, but look, I say this: if anybody made a ton of money on cryptos, excellent. Learn how to trade other asset classes too. Because if you're going to live and die by cryptos, I mean, it's going to be interesting to have like this emotional wave of, I made all this money in a year, and then I didn't do anything for 3 or 4 years. And then I made all this money in a year, and then I don't do anything for 3 or 4 years. So that's a lot of emotional volatility to have in an instrument that is, going up exponentially and then 80% correcting. That's crazy, right? So anyway, a lot of opportunity.
Nice.
Yep. I'll take it first, Tyson. So my short-term outlook, if anybody is still long on the dollar CAD, put in trailing stops. Let the thing maybe have another a day to test the highs or so. If we go extend beyond 2,800, that would be fantastic. I know that when we first started, we could probably go back to AAA sessions at the beginning of the year. We were looking at this thing to possibly come down and test those major support levels at 1.20. Gary, I know that you had an outlook at 1.3350. I had a yearly pivot at 3350. I had the round number at 1.30. So we know that even though it's at 2760 right now or 2800 for the highs today, look, this thing could still stay extended enough and have this, call it a relief rally, right? Where we build the lows at 120 and we just keep extending to where we technically thought it was going to go anyway, which was 130. So I'm not going to fight this current trend because it's been so fast. Although I think that, look, here's what I'd like to see. We've taken all this profit. I've been long since 120. Now is the time to start trapping, protecting profit. If it still wants to run and keep drifting higher, well, let's see if we can hold on to that. But if it's going to come back against us, I'm fine waiting to see if a dip comes to like 2,500 or 2,500. I'm going to look to see if I can buy those dips and then look for another push into 1.30. If it extends currently and stays bullish and drifts up to 1.30, then I will have that discussion around fading that move back down into the 126, 125 area. So for right now, Gary, I am strictly protecting and I'm out of my dollar CAD positions. I want to buy it about 200 pips lower. I want to sell it about 200 pips higher. Right now, it's like just protect your profits, call it a day. I'm not doing anything on dollar CAD right now because it's been such a good run to take all these profits.
100% agree. In fact, I'd be a buyer to get real specific. I want to buy at 25.25 and 23.75, and I think that would be the next ride up to like 31.50.
Yep.
And pat yourself on the back. Congratulations. I mean, there shouldn't have been anybody. One of two things should have happened. Either one, you watched the move happen, you didn't make any money, but you're like, oh man, these guys called it out right. Or two, you made a bunch of money in this trade. Because we've been calling out long dollar Swiss, long dollar CAD for a while, like short Aussie dollar for a while now. And so hopefully you're making some money in that. And so great. I think that because we're hitting the D extensions, because we're sitting at that level of, so there's nice supply, nice potential resistance here. If you miss the next 200 pips, I think I'd be okay with that, locking in profits, looking to buy lower.
Yeah.
Yep. Where do you think the correction move is going to take us, Gary? Because we're saying the same things. I'm just going to sit in cash for that correction to happen, whereas you're planning on let's take advantage, let's profit on the downside. So what is your target in the corrections down?
I like it. Yeah.
I like your level that you're targeting too, because again, if I want to buy at 25.25 and then I want to add at 23.75, my average price would basically be right at exactly where you're targeting. So I like. Yeah. Yeah, Aussie New Zealand dollar is an interesting currency because it's one of those currencies it's kind of a safe place to try to hide out a little bit in kind of weird times because you're trading two very correlated currency pairs together, and so you know if the economy does good, it's kind of a coin flip on which one's going to do better, all the Aussie or New Zealand. If the economy does bad, it's kind of a coin flip. So it's really technically sound. This is a very technically sound currency, and it's hard to get yourself into a lot of trouble with this, is if you give yourself some time. And that's the beautiful thing about it. Chris and I were just joking around, or before the session, we were joking around about how somebody could come in and be like, "Oh, I'm going to sell," and if you give yourself enough time and you don't, eat up all your margin, you're probably eventually going to turn that trade into a really nice profitable trade. Somebody could also come in and say, "Oh, I'm going to buy," and if you give yourself at this exact same level, so essentially, this is one of those currencies that you almost can't go wrong on. You can. I don't want to act like you can't, but it's hard to go wrong on if you give yourself enough time and you have the margin to be able to follow through with the formula. So, but technically speaking, right now, without having to I don't want to have to get into 18 different positions. So let's try to time our buys better. I am a buyer. Now, keep in mind, this is just going to be a little bit of a shorter term trade just for this week. I think we could go up a little bit higher than this, but I've got a trade specifically right now where I'm long at 105.67, just simply because we have like a nice demand level that we're sitting at right now. We've had a nice flush down last week. I always think of it in the terms of, okay, if sellers were going to come in to sell, or let's say there was a group of sellers, have they already sold likely? And looking at a picture like this, the answer oftentimes is yes. This not guaranteed, but they've likely probably sold last week or the week before. So that leaves buyers. So I like buying in this area here. If we push down a little bit, I also have an order at 105.05. I'm going to keep my stop pretty tight. This is going to be interesting because I'm going to keep my stop at about 104.70. I don't love that stop, but the reason why I'm placing my stop there, it is below a little bit of a demand on a daily basis, but I'm only going to target 106.25. So I'm not talking about a trade that's going to go to the moon, because we did knife through some levels. So the trade is this: long at 105.67. I'll buy again at 105.05. My target's 106.25. I think we can get there this week, early next week. My stop is at 104.70. I might give it a little bit more room. The only reason why I don't want to go a little bit deeper now is because I'm not totally convinced that we can get back up to 107 on this push.
Yeah.
So Tyson has a good. I mean, that's a fantastic short-term outlook. Aussie New Zealand has been like my favorite currency of the last probably 5 years. I plan around it. I do a lot of position trading on it. Traders that have been with me in Flex, they've seen me make a lot of profits on it. They've made a lot of profits alongside me. I like long Aussie New Zealand and holding long until I hit 106.85. I know that's like, well, it's at 105.67, right? It's only 120 pips away. It's only 110 pips away. But if we continue to flush down a little bit at a time, I'm willing to buy it at 105, 104, 103, 102, 101, and I'll target 106.85. I have done that for like the last several years. Like Tyson said earlier, it's one thing, like, you want to know, like, oh, the yens are crazy. Oh, the dollar's crazy. Oh, the CAD's crazy. The Aussie New Zealand, you're essentially taking two commodity currencies and two commodity-based economies, and you're putting them into the most technical market in the world. Yep. It behaves. If it's oversold, it probably bounces. If it's overbought, it probably retreats. If it's looking for pivots and targets, it probably finds them. If it's looking for pockets of supply and demand, it probably finds them. So all the things that the three of us talk about when we like to trade, that's a currency pair that the only downside is it's a very slow, boring currency pair. It only moves like 30 to 40 pips a day on a daily trading range. But when it does get the chance to trend, it trends. It can be a little bit crazy, but if you have been short it ever, you probably made money at some point. If you bought it ever, you probably made money at some point. So I like it right now. The fact that we had an RBNZ rate decision last week and we created a nice little inefficiency in pocket at 106.85. I'm going to build a position around that. So like I said, if it continues to flush lower, we were talking about this before the session, it could be a very fractional monetary policy divergence happening right now in Aussie, New Zealand. The RBNZ is holding at 0.25% for their official cash rate, and the Australian dollar or the RBA is at 0.10. So if that's enough to flush this down for another 3, 4, 500 pips, I say bring it on. I'm still going to buy it back to 106.85. I'm going to cost average in. And I told traders in my flex room, you got to pick a team. Because last week I said the better trade is to be short. Short this thing on a pullback at 10600 and be short. And if you're doing that, you're loving it. This is a nice trade, and let's see how long this can go to the downside. I told traders you want to buy it. You got to consider buying it at major support levels. Look left on your chart on the daily and weekly chart and have these zeros picked out. Buy it at 105, buy it at 104, buy it at 103. So there's a nice way to plan around it. To me, this is more of a position trade. I will build around it. I mean, Gary, I know that you built positions on dollar CAD. I spent the last 3 months in dollar CAD. I'll spend the next 3 months in Aussie, New Zealand and not even think about it. So for me, it's eventually going to be a great trade. Mm-hmm. Yes. Can you show the chart, Gary? Are you trying to show the chart right now? No. There you go.
Yep.
I like it. I'd like to take a look, and again, maybe this is just my bread and butter, but I'd like to take a look at the Euro Swiss. I'm long in the Euro Swiss. I like getting long Euro Swiss. I'm still long dollar Swiss. I'm essentially still long dollar Swiss on every dip. Right now in the interim, I'm liking dollar Swiss long towards 93.50 or higher. I know, Tyson, you said it last year. You said at the beginning of this year, one of your strongest, largest money flow patterns was dollar Swiss bullish, and you're looking to take it back to last year's high or close to it. So
100%. Yep.
yeah, so I mean, I like dollar Swiss long, trying to do as much as I can to level myself in. Again, it's a position that I will take partial profits when I have them. I'll level in and buy lower and buy deeper. But I like dollar Swiss long, and I like Euro Swiss long. Now, they're not the same currency pair. Like, I think if we look at, I wanted to ask Gary, because I know he likes to do a great job with the charts and talk about wave cycles. To me, this looks like a wave 4. To me, this looks like a wave 4. And so that wave 4 is a corrective wave. And when it's eventually ready to go into a wave 5, I'm looking for another projected move higher. Unless Gary's going to say, no, Chris, this is a down wave and this is our ABC correction and Euro Swiss is going to head lower. What are you going to say? Yeah. Nice.
Yep.
I like it. Let's see it. Let's see it. Yep, that's what I'm doing. I've got levels in. I'm just being patient. I think that I like the kind of well, I just think that longer term we'll eventually see 118 to 120 again. There's something about that. Well, we know what we should know what 120 is from 2015, right? 120 was the peg. But I think the way that it broke down from there, we see a pretty nice level between 117 and 118 that I think I'm going to give Price a chance to try to get back there. So if I get filled and level in between 108, 106, and I'll take it up to 112.50, 113.50, that's what I'm looking for in my flex room. That'll be plenty of profit. If it goes up higher than that, then we'll do our best to participate. But I'm just looking at I've got some robots trading it, buying some dips. I'm trading it, buying some dips, leveling in. So I just want to look and see what the overall outlook was ahead. So I like it. Oh yeah, yeah, Mhm. Yeah. Yep. I like it. Cool beans. Yeah. Yeah, so yeah, myself and Tad Devan and Tian Crick, we're doing a trading battle, and it's the three of us against each other. We're all finding directional bias the same way, just using the tried and true foundation of Fibonacci's, and we're using our favorite strategies and favorite systems. So our goal is to take a live account and produce, the biggest gains we can within good equity management. We're not looking to blow up our accounts or anything. We have a a certain parameter where we'll have to pull the plug if we make a mistake. But it's for fun. It's live money, and we're doing it now. So, I mean, officially the trading has begun this week. We're also going into the Olympics start on Friday and going into next week. So, in the spirit of the Olympic Games, we too are having the trading games. And if you want to tune in for more, again, follow myself and Flex. Follow us here in AAA. Follow our trading rooms and Analysts on Demand. And you're going to see myself. I mean, all of us are trading live, but for this particular trading games contest, it's Tian and Tad and myself. And we're taking some live money and seeing how well we can do with it in the next few weeks. So tune in. Plenty to trade. A lot of action. Yes. Yep. It'll be we're starting officially trading next week. So all of next week we're trading. Yep. It's going to be Tuesday next week. Yes. Yep.
Is everyone?
Bye.